Hi guys, welcome back to the channel. My name is Dave and happy almost 2023. We're not quite there yet, but as I look at 2023, just around the corner, lots of negativity, right? There's lots of pessimism. Everybody's looking at the stock market and predicting things like S&P 3000, things like that. You got guys like this trying to predict in the short term which way the stock market's going to go, and we've been shown time and time again that you can't do that. You can't say, look, how to prepare for a bear market. Negative. You can't say how to sell covered puts. Trying to pick a direction in the short term is just foolish behavior. So what should we do as fundamental investors? What can we do going into 2023? Well, we're going to talk about that. I'm going to show you an M1 account that I've set up that I've been doing for about 1 year. We'll see how it's performed versus the S&P 500. And I have a question for you. What is the single best thing that can happen in 2023 for this particular account? Do you think you know? If so, comment down below. If not, I'll let you know. If that is what you're looking for, please stick around. Whoop. So part of the reason for this video is I've had several people asking me recently about the stock market, getting started. Is this a bad time to invest? Those types of questions. And my answer is always kind of the same thing. It's never really a bad time to invest. We can't really predict the direction of the market in the short term, although you'll see some of my videos and several other people talking about that and trying to take advantage of that. But we don't have to do that to be successful in the stock market, even in a bear market. So the account that I'm going to show you in M1 will show you that, even though 2022 wasn't a great year for that particular account, it's setting up well for me in the long run because I still have a time horizon that's going to allow me to invest through any kind of recession, whether that's a standard recession or an earnings recession. So the chart you're seeing right here goes all the way back to 1928. And as of right now, there's not been a bad time that you can pick in here to invest, right? Shown time and time again through all these gray bars, which represent the recessions, that there isn't really a bad time to invest. You just continue to dollar cost average into good solid products like ETFs. You can keep it very simple and be very successful. And those red X's are alongside, those are the bottoms, right? Where you see one starting all the way back there in 1932, 38, 49, 1957, all the way up to 2020. And during all those periods of time, that's been a great time to be an investor. And the best way to go about it during those times has been through simple dollar cost averaging. Just buying every single week or every single month. I like to do it every single week. Small amount that I put into this account. It's not a big account, but it's to illustrate to people how you can be successful investing like this. So as far as 2023 goes, a lot of people are saying, hey, it's going to be an earnings recession. Term it whatever you want. If we fall into recession, right, how long would that typically last? Well, the longest recession that we've ever had goes all the way back to 1873, and it lasted 65 months. The Great Depression only lasted 43 months. But both of those are pretty significant, right? If we look at the period since World War II, as it shows here, recessions have become less harsh, lasting an average of 11.1 months. So can I last 11.1 months? Yes, no problem. Can I last 24 months? Yes, no problem. I will continue to dollar cost average into this account. And this is kind of a social experiment. I wanted to set this up and illustrate to people that have worries and concerns about the stock market, about how you can keep it very simple and have success in the stock market. So I called it Simple Millions. And all I did was I put $1,000 in at the beginning of 2022. And every week since then, I've put in $100. And yes, in 2022, the S&P is down about 20%, just under 20%. But this account is down only 9.74%. I found my alpha. I've defeated it only through a very simple setup. And the setup for this account is about as simple as you can get. This is the Bogglehead 3-Fund portfolio. So I'll show you what I have in this, but it's basically VTI, which is the Vanguard Total Stock Market Index. It's VXUS, which is everything, a Total International Stock Index. And then it's BND, the Total Bond Market Index. So those three combined at a percentage, buying every single week, and this is what you get. I'm down 10% in a year when the S&P was down about 20% year to date, which is, again, just a few days away from completing this year. So I started out this whole video with, what can happen? What's the best thing that could potentially happen with Simple Millions in 2023? And you probably know the answer by now. Now, I'm certainly not going to root for a recession. I don't want to see people lose their jobs. I don't want to see any of the other problems that come along with a recession. However, for something like Simple Millions, if we see S&P 3000, if it correlates with a drop in the stock market down about 3000 or 2800, that will be great for this particular account as long as I can continue to fund it with my $100 every single week. And as we pull out of recession and we start setting new highs, or we recover back to where we are right now, you're going to see a lot of positive green numbers in this account. So that's kind of what I'm pulling for, in the sense that if that happens, that's going to be the biggest benefit for this particular account. And that's the beauty of investing like this. It's extremely simple and it only has a few ingredients. The ingredients are dollar cost averaging every single week, simple funds, and time. Add those three ingredients and you will have success in the stock market. That's all you really need. I mean, look at the holdings here. We've got VTI, $3,600, VXUS, $1,100, and BND, about $800. And the breakdown there is 65% VTI, 20% VXUS, and 15% BND. You can tweak those a little bit depending on your age and how you want to do it, but that's extremely simple. And in 2023, I'll probably add a couple other funds and diversify. I mean, this is extremely diversified. You don't have to diversify anymore, but I might allocate this a little bit differently into a couple other funds. The bottom line here is that if you've got a little bit of time, if you've got a diverse portfolio and you dollar cost average into it, you should have no fear of the stock market if we were going to enter into a bear market, which again, I think is very difficult to predict. So while a lot of people are in that bear camp right now, hey, just keep it simple. You can focus your time in other areas and that'll be great for you as well. Put your time and effort into real estate or your job or your business and just set this up to auto invest $100, and if that bear market comes, reap the rewards of being in the stock market during that period of time. Yes, the overall value might go down over a period of time, but in the long run, it should pay off for you nicely. And again, one reason that I'm not concerned about a bear market, and I'll let those people that want to pick a direction, but I can keep it quite simple and be quite successful with a setup like this. Now in 2023, I might add a couple new positions to this portfolio, but in general, we're going to keep going the same way. And we'll continue to review and see how this does. And hopefully you can build up your confidence if you're one of those people that are kind of a doubter or you have concerns about the stock market, and you'll see that over time, this is going to pay off. So in this particular account, I'm going to keep it quite simple. I'm going to show you how effective this can be in the long run. I'm going to continue to dollar cost average into these same ETFs. I might have one or two new ones as well in 2023. But aside from that, nothing will change. And if we do happen to have a bear market that lasts a year, 2 years, I'm going to reap the reward of buying every single week into those funds during that time. It's going to be a giant U shape where we start and we go down, down, down. Eventually we come out of this, right? Because my belief over the long run is we're going to head up and to the right. And again, I'll be rewarded for that because I have a time horizon that allows me to invest that way. It might take 2 years, maybe it takes 3 years or 5 years. Either way, I'll be in it long enough. I'm going to see some nice positive numbers along the way. So now if you have any questions about any of this, please ask down below. I really appreciate you watching. If you like this type of content, please like and subscribe. And we'll see you next time, which will be 2023. Have a great one. Take care. Whoop.